Welcome back, guys and gals, to the channel. Yes, we're going to talk about the stock that has really not gone far in 5 years. Can this company skyrocket again? Yes, we're talking about Intel Corporation. What is happening? Is this the company to look into? They go into cloud computing, data center, PC solutions, AI chips and processors, software development, and so much more. What is happening with Intel? The video has flown on by. Can Intel come back and roar back up into the stratosphere, or are they lost in the sea of the cloud of the AI revolution? Well, you're going to find out today as we do a deep dive into Intel stock analysis, where we look at the financials of the company from revenue, net profit, return on invested capital, EPS, PE ratio, free cash flow, shares outstanding, and everything in between. And if you stay right to the end of the video, I will give you a potential intrinsic value of this company to do some more research on and see if this company may potentially be a buy for you. Let's get into it right here, right now. Intel, we're going to talk about it right here on the channel. Remember to like and subscribe to the channel if you liked the video and share it with your friends. Let's get to it, Intel stock analysis. Welcome, guys and gals, back to the channel. We're talking about Intel today, and yes, we're going to get straight to it. Let's have a look at the revenue of Intel. Yes, revenue has been a bit of a disaster. In 2022 was 63 billion, going into 2023 54 billion. Rubbish. Absolute not good if you're wanting to make big money out of this company. Not good. Same with net profit, 26 billion now to 21 billion. Is this going to continue, or is this just a bump in the road for Intel? That's what you have to decide at home. EPS 1.36, very mediocre for this sort of company, so very low. P ratio of 32, so they believe this company is going to continue to grow. Interesting. Maybe it's overvalued. 52-week range to 24.70 to 51.28, and it's at about 42, so above the median for the last year. So that is where it's happening currently. And over the 5 years, it's virtually been down 10% over the last 5 years. So you were losing 2% each year in this company if you invested 5 years ago. So not good, but there's a lot worse situations out there. Let's be frank about that. And if you're getting a sweet dividend, then you really weren't losing much. So the dividend, is only 1%, 1.14%, or 50 cents you get every year per share you own. Short interest is very low on this company at 1.47%. So they don't look like this company is going anywhere anytime soon. Market cap of $185 billion. Yes, $185 billion. And they have more assets than they do in the market cap. $182 billion up to $191 billion. And what I really like about this company, if there's something to like about, folks, get excited. Total liabilities, even though it went up a little bit, 78 billion to 81 billion, it's less than half of their total assets and total liabilities. And half of that, or even slightly more, is in long-term debt. So if they can get rid of that, promising. 37 billion up to 46 billion, that's the worry, because it's going backwards, baby. Yes, it's going backwards, the free cash flow. Minus 9 billion, and now minus 14 billion in 2023. That with the net profit going down, revenue going down, long-term debt going up. You start scratching your head, is this company being run well, or are they trying to wither the tide, when it should be probably going great guns for these sort of companies right at the moment, if you look in the video and the likes. So something badly is going wrong in this company, no doubt about it. The management are not getting it right here, right now. Shares outstanding, 4.2 billion. You've been diluted the last 5 years. Absolutely. Just about everything I've said so far suggests to you, folks, you should not buy this stock. Wow. But anything can happen. Return on invested capital, 0.05%, so virtually nothing. Oh my goodness. Not good if you're an Intel investor, I can tell you that much. And for it to only be down 10%, wow. Surprising. But anyway, let's have a look at, that's over a 5-year period, folks. So where do I see what's going wrong with Intel? Well, clearly they're not spending their money wisely, or they're spending a lot trying to grow the business into something humongous. That's basically the only thing I can see is what they're trying to do. But they're starting to lose net profit and revenue. If that continues to go downward trend, the stock price will continue to go down, then they won't afford the dividend, and that'll drop down as well, and it's just a snowball effect, and then this company could be zero, and that's why the price is 1.47%. I'm not expecting them to go under, but there's potential looking at what we're seeing at the moment. But if it's only just a 1 year blip and they're going to bounce back in 2024, you'd better hope they do, if you're an investor or looking to invest. But anyway, let's have a look at what actually the intrinsic value roughly of this company is right now. So when time of recording can be different to what I'm saying here, but the current share price is around $42 at 1.36 the earnings per share at 5% growth rate with the bond yield. You're looking at around a $26 stock is the intrinsic value of this company. And that's rough, and they're actually going backwards at the moment, but that is a little bit best case scenario at the moment, and you're paying $42, so overvalued. 1.36 and we go up to 10% growth, you're nearly at break even at $40. Then if we boost that up a bit and go, yes, EPS is going to go up to $2 at a 10% growth rate, then you're starting to look at positives $59. Then after that, we'll look at, if you're looking at the next investment up from there, you're looking at $42 with an EPS double of 2.7, growth rate of 15, you get $108. Yeah, so this is interesting, Intel. So if you think this company's going to go berserk and somehow double its earnings per share, then this is a potential buy right now. But to me, I'm a little bit iffy. I'm not convinced, obviously, with a company being so long in the game. Why are they struggling so much? Why aren't they really starting to go back to profitability instead of minus 14 billion free cash flow? The revenues dropped by 9 billion. It's not good signs for a company that should be flying higher and higher in the current cycle in the moment. So Intel are really struggling. They really got to fight to get their business back on track. If they do, there's a potential. But for my suggestion, I will not buy. I don't own the stock, so to me, Intel's a no from me, but it doesn't mean that you don't do your own research and find out if this company maybe can grow into the future. I just don't see it being $1 trillion company. You wanting a 5x from here? Do you think it'd be $1 trillion company? Well, the video's flying, but this stock, not so well. But yeah, Intel, for me, it's a no from me. I just don't think it's up to it. But anyway, that's Intel stock analysis and intrinsic value. I hope you got a lot out of this video. Remember to like and subscribe to the channel. Share this video with your friends. I am here each and every week with a video 3 days a week for you on a Monday, Wednesday, and Friday. I hope you've enjoyed your day and have an awesome day, and I will be back again shortly.